Hello and welcome back to the channel. My name is Trajan. I am the founder and editor of Morning Download, a personal finance newsletter. Many of you are planning for retirement or maybe in retirement. One of the questions that I get a lot as a former financial planner is how do I protect the money that I have that I've built up over so many years? Whether you're retired or just have some money, you're just starting the journey, it's important to protect the money that you have. So in this video, I'm going to talk about some strategies to employ to make sure that you keep the money you have, especially the older you get, the closer you get to retirement and into retirement, what you should consider to protect the money that you've worked so hard for. So number one, of course, is to diversify your investments. Or as they say, don't keep all of your eggs in one basket. No matter how much you love that investment or that stock or that crypto or whatever it is, a real estate, anything can happen. The world is a crazy place and stocks can oftentimes over a long term, over 10, 20 years, go to zero. So it's important to not put all of your investments in one place. So spread them across different asset classes and different stocks and investments within those asset classes. So asset classes meaning stocks, bonds, real estate, other property you might have, valuables, gold, silver, etc. So, and also consider having a bulk of your investments in low-cost index funds for broad market exposure and low cost. They have very low fees. And make your portfolio more conservative as you age. So why should you listen to me? I'm just some random guy on the internet. I happen to have spent a long time as a financial planner and CFO, but you should always do your own investment. None of this is investment advice, but I want you to think about some of these ideas as you think about protecting your investments. Number two is create a sustainable withdrawal strategy. A lot of people in the FIRE movement, the Financial Independence Retire Early movement, quote the Trinity study, which states that you should withdraw no more than 40% of your assets out every year. This study has been around for a long time, since the 90s. It showed that if you withdraw 4% or less, your assets statistically will last at least 30 years. So that can be a starting point, a base point. You don't want to draw out much more than that. Some people say 5, Dave Ramsey says 10. I think that's way too much and too risky. But figure out your withdrawal strategy from a percentage standpoint and then adjust it based on how the market is doing. The market is doing very well. Maybe you can go a little higher. If it's not doing as well, go a little bit lower. Consider delaying your Social Security benefits if you can. And then use the 3-bucket method. I did a whole video about the 3-bucket method and I'll link it below. But basically it says to have your short-term money, your emergency fund, your cash in the bank that's accessible, your medium-term money that can be somewhat accessible in things like some stocks and more volatile things, and then your long-term money, which is your retirement money, that is the most conservative, that you just kind of leave there, that may be a little bit harder to get to, like real estate, that you don't want to sell when the market is low. So the 3-bucket method. Check out the video below after this to learn more about how to divide up your assets into 3 buckets based on time horizon and volatility. And number 3 is consider protecting against inflation using TIPS, which are Treasury inflation protected securities. They're a type of bond that you can buy that will keep pace with inflation. You can consider real estate investments as a hedge against inflation. Stocks can be a hedge, and also Bitcoin can be a hedge. Stocks and Bitcoin have been a great hedge over the last few years as inflation has gone up. The value of those has gone up. They tend to keep up with inflation because as prices rise, companies will increase their prices to keep up with inflation because they don't want to go out of business. So stocks and Bitcoin can be a great hedge against inflation. And then they can look into I-bonds for inflation-protected savings. Number 4, of course, is minimize your taxes by utilizing Roth IRA conversions strategically and withdrawing that money strategically at 72 or beyond, or 59 and beyond. The required distribution is 72. And then consider setting up a trust to protect your assets I skipped ahead. And then To reduce your taxable income, consider charitable giving strategies to reduce your taxes. And then jumping into estate planning. Estate planning, I think, is something that a lot of people overlook because it seems either over complicated or just not necessary, or it's kind of a thing people don't like to talk about death and what you want to do when you die with your assets. But there's a lot more that goes into estate planning other than just your will. So creating and updating your will and your estate plan, which includes protecting your assets, designating beneficiaries, designating what you want to have, how you want to be treated in your older age if you go to a nursing home, etc. So update your estate plan. And then kind of related to that is long-term care planning. So investigate long-term care insurance options. And basically long-term care is an insurance policy to pay for any kind of care you might need in your older years. As the cost of healthcare continues to go up every year, you can get long-term care policies that will pay out a benefit that will cover any kind of stay, various different kinds of stays, whether it's hospice or somebody coming to your house to take care of you for a couple hours a day, or going into a retirement home. There are different kinds of policies that can pay out different benefits. You pay into those early. You can start when you're in your 40s or 50s and pay into those, and they can help you pay for those costs that you might incur later in life. Or you can choose to self-fund that. If you've got enough assets, set aside some assets to pay for long-term care or any kind of medical care you might need. Or there's some hybrid life insurance policies that have life insurance and long-term care benefits together. So talk to your insurance agent or financial planner, if you have one, about what kind of options there are for long-term care. If long-term care is something you're interested in hearing more about, then please comment below and I'll make a separate video. As I said at the beginning of the video, I used to be a financial planner and I helped a lot of families with long-term care, including my own extended family with long-term care, and I think it's very important to consider. Next is avoid the common pitfalls, like the scams. There are a lot of scams going around. I made a separate video. I think I made a couple of videos about the scams that people are running into. Maybe you've seen them. You've had people call you or email you, and now people are using AI to create these scams. If you have heard of some of these scams, comment below. I'd like to hear what you're seeing out there, as there are a lot of things going on. It's always changing. So watch out for scams. People prey on especially older people, older retirees, because they've got the money and they're not so technically savvy. So beware of those. Beware of any kind of investment offering an unrealistic return. You see this all over the internet where it says, send me a Bitcoin or send me $100 and I'll send you 10 times back, or invest in this and you're going to get 1,000,000% return. If it sounds too good to be true, it probably is a scam. And then be very wary about co-signing or loaning money to friends or family members without careful consideration. There are a couple of things to think about. One, of course, if you loan your money to your grandson who's starting a restaurant, that could be just lost. So consider any kind of loan or as a donation. You're probably not going to get it back if you're loaning money to family and friends. And two, it can damage the relationship. So you don't want to lose your money. You don't want to damage the relationship. So be really careful about that and think through all of the implications about what happens when it goes bad, because it probably will. And you don't want to be a collector to somebody in your family. You don't want to be calling them up and saying, hey, you owe me money this month. It just puts a strain on the relationship. And people who have accumulated some money, especially later in life, tend to have people asking them for money. So if you do loan out any money, make sure that it's all documented, it's all written out clearly. Maybe get an attorney involved and make sure that all of the I's are dotted and the T's are crossed, and it's very clear when the money needs to be paid back and there's collateral. So then later, if things do go south, you've got it all clear and it's easier to collect your money if you need to. And then of course is staying informed. Keep up with financial advice through financial videos, through a website like morningdownload.com, where we have a daily newsletter where we summarize what's happening in the market and offer tips every single day and strategies on how to build your wealth in our personal finance section, and we have a lot of resources, including our new retirement calculator on our website. Go to morningdownload.com, go up to the top menu, and then there's a calculator there that will show how much you need to save for retirement and how much you will have if you continue to save at your current rate. It's a great calculator, so check it out at morningdownload.com. And then, of course, regularly consult with your tax professional, your accountant, and your financial planner if you've got one, and make sure that you spend as much time protecting and preserving your assets as you did building them up, because that's just as important. So if this video was helpful, if it gave you some ideas, some things to think about, then please subscribe to the channel and like this video, and check the link down below where I talk about the 3-bucket method that I think could be very helpful if you're looking to protect your assets. And we'll see you in the next one. Thanks a lot.